Hello, welcome, Mr. Mansoor. This is your host, Harsh. I hope you're doing well. The session will start in 17 minutes, brother. Thank you for joining. All right. Good evening and welcome back to another session of potential elite wave analysis for a few instruments. And warm welcome to Mr. Rees, Muhammad G. Matthew is here with us now, and Mr. Taha as well. And those who are joining live from YouTube, warm welcome to you as well. If you do have any questions, kindly type in there, and I have a habit of toggling in between will be will be doing my best to able to answer the questions during the sessions. If not possible, we'll take them afterwards in your comments section. Once again, a warm welcome on behalf of GTCFX. This is your host Harsh, and without wasting a moment, let's get started off. Thank you so much, brother Matthew. It means a lot, and thank you all of you for taking the time. Mr. Shukla ji is also here. Thank you, Shukla ji. Let's get started as usual with the this disclaimer, and then we've got stuff to do with some instruments. All right. Over the counter margin derivative contracts, including contracts for difference and spot foreign exchange, are complex instruments and come with a high risk of losing money rapidly due to leverage. I hope you understand what leverage is. And you should consider whether you understand how these products work and whether you can afford to take the high risk of losing your money. Independent professional advice is highly recommended before any kind of investing or trading. And this session serves an educational purpose and will not include any financial recommendation or advice. Thank you very much. Sometimes it feels quite the other way around, but please take these sessions as a purely educational basis. We know that we are all trading, but this is what it is. Okay, let me just bring up the charts now. I think we would start away today. We will start with gold. So that's the instrument which has taken us out all of them. And it's important to know. Let's try and find out what the potential counts are telling us now. The price action in gold is let me bring up the daily chart where the counts have already been done. So it will help us. Okay. Now, for all who are here, please let's go through the story which begins from October 22. Primarily, gold is in an uptrend at a higher degree, at an intermediate degree. Sorry. So bracket wave 5 is in process, where around 1800, around October 22, intermediate wave 4 was terminated. I haven't labeled here, but it was intermediate wave 4. So intermediate wave 5 is progressing right now, and it is almost done. And within the intermediate wave 5, we all know that uh, the fifth wave at any degree is normally unfolds into 5 waves. So here is the first wave, the second wave, extended wave 3, which rallied all through 2780, adjusted wave 4 around 2537, which we were expecting as an expanded flat. And now the fifth wave at a minor degree is unfolding. I repeat, sir, the fifth wave at a minor degree is unfolding. Now, by the time the fifth wave completes, prices should have reached at least the 3200 mark, and that would also be the termination of intermediate wave 4. Let me just intermediate wave 5. This is Okay, there's no need to write the bracket. It will disturb the counts here. But now the question is, it is lying here where price action yesterday shot up about 2960 in a flash. All right, so it is it is important for us to know what is happening here. Let's try and find out on a 4 hour time frame. All right. Before we do that, minute wave 1 within wave 5 is complete. Minute wave 2 is done. Minute wave 3 is also done. The question now comes about the minute wave 4 all the time. Even last time it was minor wave 4 in the question, right? Now there are two interesting facts that are coming up, which I observed in the last hour, which I would like to present it here. Number one, if you can see this channel, I don't know if you can really have the look at this channel. This channel needs to be tested again. Prices haven't done that. All right. And if wave 4 is complete, first things first, let's go with the higher probable count first because we don't want to take unwanted risk here. Let's presume that, okay, wave 4, the three wave corrective decline was complete at 2830. Okay. In that case, prices will now stay above 2882 under all circumstances, and the labeling can be done as uh, potential wave one. Let me bring up. Uh, that is minute degree wave one, two, and going forward it will be three, four, and five, and prices would steadily rally towards the 3200 mark. That is one scenario, which is an obvious scenario why because the trend is up. But now I want to bring the attention to the other possibility as well. We are not into any trade right now. Our stop loss was hit at 2960 yesterday around 2960. The stop got triggered. So we are flat right now. But what is interestingly happening at this point in time is prices have touched the 38.2% of the first wave, which we are now labeling as wave 4. Prices rallied through the 38.2% of that particular wave. Now, there is a correlation here of an expanded flat, which I've discussed many times in the previous wave 4 as well, when we were discussing a potential previous wave 4 over here as an expanded flat, a potential expanded flat. Now, this could be an expanded flat in the making as well, and I will not shy away from discussing that scenario just because we have been talked out of a stop. Expanded flats look like this. These are corrective waves, point number one, where wave B rallies above the extreme of wave A and then reverses sharply towards completing of wave C. So over here, if we try and compare what this prototype says, that is the first wave, wave A. This could be the second wave B, which is exactly touching the 38.2%. Now the correlation between wave A and wave B is normally wave B rallies up to the 38.2% of wave A. That's why I brought up this Fibonacci ratio. Wave B is touching or testing the 38.2% of wave A potentially. So if a reversal happens from here, and we can see it is a 535 structure, which can also be labeled as an ABC. So if this is an expanded flat, that's the last point which is being tested right now. If prices reverse from here sharply, then there is a potential chance of wave C in the making, which can bring prices lower all the way towards 28.30 or 28.10 as well. So this is the last stage. We'll have to just wait for one more day for a confirmation, and once it is received, we can issue a potential short trade here as well with an immediate stop loss about 3,000 mark. All right. So this possibility is not ruled out in terms of the wave principle as well, which could be an expanded flat. Normally, there are not two expanded flats, but it is just a guideline. It is not a rule. So we just have to keep this in mind as well. All right. Another reason why we would like to go, or we would like to believe that this could be an expanded flat in the making as well, is the diverging scenario. It's not clear here, but it is very clear on the daily chart. There you are, the diverging scenario on the RSI. Now this is what I'm referring to, sir. Prices have rallied higher above, and it has printed a new high above the previous high, as we all can see, about 2960. All right, over here. And look at the RSI, which is lagging far, far, far behind. So you've got three down and you've also got three up. So at least for now, there are three waves on the lower side and three waves on the upper side. So it is still within the vicinity of an expanded flat. Only if it consistently rallies above 3,000 mark, then we would be we would be happy to confirm that all right, intermediate wave 5 is in the making, and prices would steadily rally towards the 3,200, 3,300 mark going forward. All right, sir. So this is what I wanted to bring. We just wait. We will not issue any particular trade direction at this point in time. Potentially we are flat right now, but please keep a watch on the price action. A drop from here, a bearish reversal from here, and a break below 2980 going forward. 2980 going forward would be the first step to confirm, could be the first step of a potential drawdown. All right. And even more confirmation would be received when prices actually break below the 786, which is around the 2928. You can see that 38.2% is tested right now with various diverging scenarios. So please wait for one more day. Let prices break below 2980, and then on a pullback, you can take a call. We might not be together at that point in time, but I'm always available on email. And the next live session is already scheduled on Tuesday. So maybe we'll be able to discuss this scenario on Tuesday. This is quite possible, right? So let's remain flat for a while. There's nothing wrong in doing so. And then we'll take a call probably early next week in gold. All right, sir. That's the story in the yellow metal. Let's go back now to the euro, where the action is already there, and we have suggested some potential limit orders, but there is a change here. I don't know if you got it last time, but there is some change in the limit orders as well. I'll bring up the scenario now. All right, I am not plotting the wave structure because we have discussed this time and again. I'm just running through the pointer here. You see that entire rally was an impulsive five waves, which is indicating that the larger degree trend turned higher in July 2023 sometimes, which is one expanded flat, two, three, triangle wave, four, and five, which is also followed by an A, B, C corrective wave. Uh, of course, it took 2 years for that correction, but it's a daily chart, so not a problem. That correction has settled down around the 13th of January. We have been time and again telling that 13th of January low is a major low, which could be lasting for a few weeks or a few months, at least 8 to 12 weeks when it all started. All right, and I think we are in the somewhere in the middle. Okay, now the action is lying on the right hand side. Now this is wave one, wave two, and the third wave is unfolding, which is still not complete. So there will be wave four and five going forward. All right, that fifth wave is going to go above 1.1127. So please keep this bigger picture in mind. We have been calling for this five wave rally since the day we started these live sessions. I think it was 17th of Jan. All right, it was very aggressive that point in time, but now we are already midway. Just imagine buying around one point, that second wave drop, wave two drop right after the tariff war began uh, on 3rd of February. Now, that was the instance when it was a confirmed or potential high potential reversal confirmed in one of the sessions here. And first things first, we have hit the first target and we are very close to hitting the second target as well of the first wave. Now the question is where to enter to buy and where to place our protective stop loss. Now this theory helps us do that quite an effective way. First of all, this third wave could be complete or it is still in progress. I repeat, sir, it could still be it could be complete or it is still in progress, this third wave. So if it is complete, I probably would have suggested, I think I think somewhere else actually with some of my other colleagues that it was a good idea to go long around the 28 850 mark yesterday when the low was formed. And you can see that prices came very close to the 23.8% Fibonacci retracement. All right. Now this remains a good possibility. The other possibility now is that prices could, now this is three down, that is again three up. So if it is forming a standard flat, then there is a good possibility of prices dropping towards the 2750 mark and then resuming its rally. All right. So the trading point of view, now let's clearly define the buying range, potential buy zone, and the potential stop loss. And targets are already flashing up on your screens. Now buying zone comes around the 750 to 800 zone. I'm just flashing the pointer there. 750 to 800 zone. Anywhere close to 800, you should be entering, or you could be potentially buying uh, there. And you could extend it, the drop could extend it towards the 750 range. So that could be, let me just write it down over there, potential buy. All right. And the stop loss would go below the 28th of February lows, but the risk reward ratio would be almost 1 is to 1 case. Another another technically correct place to enter the stop loss is wave 1, termination of wave 1. So you can place your stop loss here. Now according to the theory, if this is wave 4 in the making, I haven't labeled this, but that's wave 1, 2, possible 3 and lower degree wave 4. If this is wave 4 in the making, then prices, okay, Mr. Rashid has come. Welcome, Rashid. We have just analyzed gold, but please stay there. I will revise gold at the end for you. No problems. We have just completed gold, but please stay back. We will revise gold for you. So the stop loss remains can be technically placed at 1.05 as well. Ideally, if it is wave 4, it will not enter the territory of wave 1. So potential buy is around the 750, 800 zone. If you are an aggressive kind of a trader, if I would be trading aggressively, then I would have taken already one portion or long right now, and remaining I would leave it to 750, 800. But if you are wanting to do it in an optimum way, that is the range potential buy, that's the stop loss range, and the target, that's the target. Now targets are anything but potential Fibonacci ratios. Please remember that this is a third wave extension going on, and when the third waves are extending, they tend to go much ahead of the Fibonacci ratios which have been printed here or which have been printed here. All right, so 1.11 could be a very conservative target. Technically speaking, it needs to go at least above 1275. I repeat, sir, it needs to go at least about 1275 to complete the entire structure. And by any means, if you go by the equality of maybe wave A and C, then it has got the potential. I mean, this is 1700 points. If you add 1700 points to 1.007, 1.01, then it is almost 1.29. All right, forget about 1.29. Even if it goes to 1.19, we are good. 1.19, right? So these are conservative targets. It is good to place ourselves positionally when you are trading euro, USD, dollar index, and pound. These are very high potential trade setups, and we have been recommending or discussing this last 5 weeks, and prices have almost turned halfway. So please keep a larger horizon on the long side for euro. It is not going to stop ideally at 1.11. Potentially, it's going above 1.27 in the near term. All right. By the end of March, I think we should be above 1.11. That's what the projections are. Okay, dollar index now. What the dollar index has done is also on the same lines. Okay, I think Mr. Desai has joined us for the first time. Welcome, Mr. Desai. Please stay tuned. we are we are analyzing the third instrument for the day. There are still at least three more instruments to go. Thank you again for joining. So dollar index 5 wave lower at a higher degree. Rashid Bhai, please stay until the end. We will revise your queries. Okay. And on the right hand side, what we see is an ABC rally. I need to change the degree. This is a sub-minute level, so we change it to minor. It was, I think it was 13th of Jan when I was right on the screen, and of course I got stopped out personally, but an aggressive, okay, thank you. An aggressive call was issued even after getting stopped out around the 1-1. This is not 110, this is a different provider. So that high was registered at 109.70. And tell you what, prices haven't turned higher since that day. All right. Now the action, as I said, is five down followed by three up is all complete. This is historical price action. Why I'm showing you here, sir, is because we need to understand that an equal wave has already begun of that magnitude. Now this is also 1500 points. 1500 less 109 less 1500 brings us to 90 95, almost 95. We are we recommended earlier around 109.70. We are midway right now. There is still much to go. The game is still not over. All right. So you might want to position accordingly. Dollar index has stopped for good and it is underway towards 95, potentially 90, 93 as well, but at least below 100. That's what we would say. All right. Now, how to place ourselves over here? As discussed earlier, the drop has been, this is a lower degree wave, 1 and 2, and that is, again, I would say the third wave is extending, and even the third wave is extending. All right. Now, that is not complete. This is just the third wave extension. So, we've got, let's not get into too much of degrees and extensions and otherwise. Let's come straight to the point what to trade and how to trade. In short, dollar index has to be sold ideally on rallies. Now, as we speak, prices are already declining, but it is quite possible that the rally is not yet complete. There is a corrective wave. This is a corrective wave underway. Now, the corrective wave is either complete, it's a very shallow correction around the 23 retracement, or it is going to go higher towards 104.53, according to this provider, capital.com. So how do you place our trades, or how do we place ourselves potentially on the trade side? Now, aggressive traders, first of all, let me define the range here. That is the potential sell range. Now, the stop loss would ideally go above 107.33. I mean, that is the minimum level because even if you place at wave one, it is not going to be too much different. So I would say potential stop loss here. And see, we have not entered yet, but before entering, we always make sure where are the potential entries, before entries, specifically where's the stop loss, and then the targets. Now, if you enter around between now and 104.23, stop loss at 107, so that's around reasonably around 400 points of risk. And this target is showing around 101. So it's almost 1:1 risk reward ratio, correct? But tell you what, sir, this Fibonacci ratio is just wave one extension. Now the third wave is extending and the third wave is also potentially extending. So the drop is not going to go towards 101, it is going to go towards 100, 97 and 95 respectively. I may want to bring up the daily chart again to bring up those ratios. If we take a simple extension of the first wave of a larger degree, and we also take a pullback here, now these are the targets. You can see here it is 90 and up to 85. Let's forget about 90 and 85 as a daily chart targets. Okay, a minimum push, a minimum drag below 99 gets us to 97, and then the next support is 95. I don't know if it is visible on this provider or not, but yeah, this is the boundary which is being worked upon right now. I'm showing you an even larger picture to just make you understand or make us all believe that if we are not stopping around 101, ideally it is 98 and possibly we might go towards 95 as well. So when we are preparing for euro, dollar index and pound, let us please prepare for a long term. Sorry, I just got a sore throat. So even if you enter around now and 104.50, you can divide your potential shorts between that 125 range, stop loss around 107.50, and potential targets not 101. That's the first target, and then towards 99 and 97 going forward. All right, sir. So that's the third trade for the day. Let's move on to the fourth one, and which is pound. Now, GBP USD, tell you what, sir, it is the most resilient pair among all the three: dollar index, euro USD, and pound. It is the most resilient because if you watch the retracements, that was the retracement on 28th February, that monthly low. It was hardly 38.2. It barely touched the 23%. Look at this retracement. It is not even 20%. So it's the most resilient pair that we have seen in recent times between euro dollar index and itself. So I'm going to straight away say that okay, these are the targets, all right, and these are not the targets where it's going to stop. It's actually going towards 3400. So I'm saying let's say potential target around 1.32, 1.34 hundred range. Now the entries are very typical to find out because there is no retracement coming through. Now even if I pull back, the 23% is still seen around the 2830 zone. It is still 150 pips lower. So I would suggest potential buy range right here. We would not wait until the 38.2%. So potential buy range can be defined between now and 2830. There goes the potential stop, sir. That's the wave one. It is technically correct to place the stop loss here. I mean, a bit higher, somewhere around the vicinity of 2500. All right, that's again quite similar to the 28th February lows as well. So you can place your stop loss right there as well. It's one and the same. All right. Now, if you look at the risk reward ratio, sir, then 29 and 28, so it is around 300 points easily potential risk, 300 to 400, 350 points, and targets should not be kept in mind around the 3200s. 3200s are initial targets. It is slated to go much beyond 3400 as well. So kindly place yourselves positionally. And one simple, humble advice is that please do not buy everything at one price. I keep on saying this because it helps to give ourselves our to give some rooms to ourselves and let the currency breathe actually. When they are retracing, they are breathing. So let's give them some space to to retrace at least 100 points. All right. So partial small positions will do very good or would do very good, but remain on the long side. Don't try to short. It is against the trend and it will do us harm. I'm talking about all three instruments: euro, dollar index, and pound. Very high potential trade setups. All right, sir. And there is another high potential trade setup. I don't know. I think we have we normally have a demand for Bitcoin, and then Shuklaji is there. Okay. Yes, sir. Okay, so we'll do Bitcoin and we'll also touch base the crude crude oil, and then if there is no other requirement, then we'll go and touch base with gold again. We still have got at least 10 minutes left. We will comfortably complete all three instruments. Now, the high potential trade, I would not say it's a very high potential trade in the sense that we are counter trending. Now, when we are counter trending, it is not always advisable to go and buy or sell. But normally, what Bitcoin is doing now is it has completed wave one of a minute degree, and it is towards minute wave two before minute three, four, and five. I am changing this degree to minute, sir. And two reasons where it would not be a bad idea to enter on the long side is if this five wave decline is not minute wave one and it is a part of an expanded flat corrective wave, then it will help us to enter on the long side already. All right. Now, last session, I think it was on Tuesday when I think I don't remember. But I think it was Mr. Taha or anyone who had suggested Bitcoin, or if you were there with us on Tuesday, I think we were completing this motive rally. We were near to completing this motive wave. It was 12th of March, I remember, and we were just about completing this motive wave. Now, what it has done is it has not only completed the motive structure. I'm repeatedly saying motive because it's not an impulse. It is a leading diagonal. Motive waves are of two types. We know that now, an impulse or a diagonal. In this case, it is a leading diagonal. So not only the leading diagonal is complete, but it has also completed a corrective wave ABC now. So it is wave 1, minute wave 1, and minute wave 2 complete. And I think minute wave is already underway. Now that was a 79, 80,000, which was an optimum buy. If you have bought around that region, I think I suggested at that point in time, I don't exactly remember what the trade was suggested. Either it was either prepare to buy or it was buy. But right now, with it's a more confident potential buy, which the price action is already moved from 80,000. This was the best buy, but still the potential range remains. Did I move this all together? Yes, sir. And that's the target. So we define potential buy. stop and target. All right, so that's what we all normally do. So if you're wanting to place yourselves in Bitcoin, that's still the range. You can buy partial now on a correction somewhere around 80,000, 81,000. It's up to you. But the stop loss would go below 7.9. It would go 7.6, sorry. So 7.6 would the potential stop loss. Potential buy range could be now between now and 80,000. So it's going to be somewhere around 8,000, 9,000 points. And the targets are flashing up here. They are 90,000 and 96,000 respectively. Potential targets are around 90,000 and 96,000 respectively. So if you calculate the risk reward ratio, I think it would suffice if you extend it to 96,000. All right. So that's the story in Bitcoin. Potential buy with a stop loss around 76 and potential target 90 and 96. So potential long, good, good potential long in Bitcoin. And the final one, a quick view on the WTI. Sir, WTI is still sideways. Remember last analysis, we were talking about a potential sideways. Now, Shuklaji, if you see last session, there were two waves on the sideways, three waves up and three waves down. And again, now you can see another three wave up and the three wave down. So there is A, B, C, D, and possibly E wave is underway. So if this is a triangle complete, then there will be a thrust wave very soon on the lower side. It could print one more low below that 60, 60, 65, one more low. That will be the thrust wave, sir. It will be the last drag lower because after the triangle, you normally have the thrust wave. Uh, then please allow that thrust wave to complete and then go long with a potential target of 70, 72. That's the, I think that's the reasonable resistance. Okay, so we still have some time before the triangle completes. You can see that's a beautiful triangle. You can see on a daily chart as well. I mean, this is a wonderful triangle in the making. The overall structure, we've got a message here. Okay, sir. Thank you very much, Shuklaji. I think it will help because I know you trade crude oil. This is a wonderful structure. I think potential wave two is just around the corner and prices should stay ideally above that low. So ideally for a short term, please keep your stop loss just below that low, maybe 63. It may look a bit higher or greater than the normal risk, but ideally keep it for a shorter time. Once you see that thrust wave complete and a reversal, then your stop loss can be moved immediately to a break-even point. And we are all going to be with us. We are going to be together at least 4 times a week, so we can always review. All right. So that is the story in crude oil. From my side, today's instruments are done. And if you do have any other queries, you might want to type in. Meanwhile, I will quickly revise for Rashid ji what we did for gold. And also, Mr. Desai, if you would be interested in gold. I don't know. Did I name you correct, sir? Yes, Desai, Mr. Desai. I see you for the first time, Mr. Desai, if I'm not wrong. So I would like to take this opportunity to print a link. All webinar details can be found here. All webinar details. If you are interested, you might want to register yourselves. Now, We have designed a web page, a landing page where all webinars are there. Thank you, sir. No problems. You are almost welcome, and hope you will enjoy the theory and practical sessions along with the live sessions. Rashid Bhai, please pay attention. Gold is has either completed wave 4, bottom has formed at uh, maybe bottom has formed at 2833, and now gold is either progressing higher towards the fifth wave towards 3200. This is one scenario, sir. 3200. It may go towards 3200 from here, but there is no recommendation of buying right now. If it is going to go higher, we have to wait for a retracement towards, at least for buying, please wait for a retracement at least towards 2930 to enter buying with a stop loss, potential stop loss around 2877 or 2880. If gold is moving higher, it will not break 2880. I repeat, sir, if gold wants to go higher, it will not break 2880 lows. Okay, but there is another situation which could happen. Gold might produce an expanded flat A B C. You see this structure here, A B C. Now you compare it here, A B and C. This could be wave C. This could be A, this could be B, and there could be C as well. So please wait for one more day or 2 days. By Tuesday, I think we should be in a position to confirm if it is A, B, and C lower. All right. Right now, we are not recommending any particular position either on the buy side or short side, because for selling, we don't have a confirmation except there is a diverging scenario. There's a good diverging scenario. It is a very aggressive trade though, but I don't recommend that aggressive trade right now because you see that divergence means prices are rising, prices rallying, and RSI dragging behind. So there is a divergence scenario here. No recommendation of shorts can be made right now, but maybe by Tuesday, when we meet on Tuesday, Tuesday is a theory session, English theory, but we can always discuss practicals at the last. We need to see a confirmation signal uh, before we can issue short trades. All right. We, we are not recommending buying either. We are at the highest price. Please don't enter on the buying side right now. It is not good to buy at the highest price. At least give some room for a retracement. If you want to buy gold, it should not be before 2940. If prices drop towards 2940 and they are turning back, then we will suggest to buy. Not right now. This is not the right place to enter buying, and selling is not good as all because we are still waiting for a confirm signal. All right, sir. So that was the gold revision. If you do have any questions, please let me know, sir. I think we are done for the session for now. No problem, sir. Thank you, Rashid Bhai. Again, for all of you who are joining from YouTube and Zoom, we are meeting 4 times a week, Tuesday, Wednesday, Thursday, Friday. I have sent the link for all webinars in Zoom as well as YouTube. You can find it useful. If you find it useful, please register yourselves for theory and practical sessions. 2 sessions are theory, Hindi and English. 2 sessions are practical live sessions, one in Hindi and one in English. All right, so let's bring a pause here. And once again, a humble thank you to all of you for taking time and remaining present here. Thank you very much, Mr. Rees, Brother Matthew, Shashikanji, Shashi Datta ji, sorry, and Shuklaji as always. Thank you very much, sir. And this is my email address, sir. You might want to note harsh.jappi@gtcfx.com. Anytime, any moment, any questions, any queries you may have, please, please, please do not hesitate to write to me, and I would be more than happy to get back at the earliest possible time. Thank you very much, sir. Thank you, Shuklaji. Thank you, Desai Saab. Thank you, Brother Matthew. And thank you, my friend Rees, as well. Thank you for taking time, everyone. Yeah, God bless you, Mr. Matthew. It's only because of you that these sessions are going. So thank you for the blessings, and please help spread the word as well if you feel like others would be benefited, and that would be more helpful to us to spread the word. And thank you every time for taking time and attending these sessions. I really appreciate and thank you so much. Just a moment, sir. I'll write my email address again. It is there in the screen, but harsh.jappi@gtcfx.com. Desaiji, this is the email address. All right, sir. Please feel free to write to me for any queries. Once again, thank you, everyone, on Zoom as well as on YouTube. Next session is on Tuesday, English theory, where we will be discussing motive and corrective waves. Thank you and God bless. Thank you, Mr. Rees. All right, Mr. Corazon, I'm ending the session for today. Thank you once again for your time, sir. See you next time.